I am here with my co-host, Bob Schlehuber. It's Wednesday, January 27th. It's time to go against the grain. And Bob, I want to talk about what I hope is the glorious GameStop stock market story that has unfolded over the last couple of weeks. And I didn't want to have to be an expert on this. So we have called in our great friend, Steve Grumbine, founder and CEO of Real Progressives and Real Progress in Action, and host of the podcast Macro and Cheese to break this down for us. So Steve, thank you for joining us.
Oh, no problem at all. Thank you guys for having me. It's been a while.
It has been, and we really hope you're feeling better. We don't want to keep you too long and go into it, but glad to hear your voice here again.
Thank you.
Steve, just to start off, can you tell us what the hell happened, and if I am being naive in being just absolutely delighted at what these Redditors have done to Wall Street?
No, so let's be fair. They're barely picking a whitehead off of somebody's body. I mean, that's at best is it. It's not a big deal, but it's symbolic. And, you look back at Bear Stearns and you look back at The Big Short, go back to the global financial crisis when they were betting against mortgage-backed securities. And at that point in time, you looked at those guys and they were betting against scumbags. These scumbags that were actually intentionally creating this market bubble. And so what they did was they said, we're going to go ahead and short the market. These guys are trading on fraudulent paper, and it's all based on crappy D-rated, E-rated bonds. We're going to go ahead and short the market because it makes sense.
And let me stop you, Steve, before we go too far, because I want to ask you, to just tell the people who are listening what we're talking about, right? Who are these guys? Who are these guys? Who's this stock, and who are they betting against?
Okay, so let's reel it back. Sorry about that. I'm jumping in the deep end. The folks with GameStop right now, you've got a company that is literally in a dying market space, a market space where people drive up to the store, get out, get a DVD or a CD for their game system. Well, GameStop's model has lost big time. Both PlayStation and Xbox both have complete streaming services with systems capable of streaming in virtual reality levels. So we're talking about the days of driving up to the store and buying the video game. It's like Blockbuster for video games. It's about to come to a screeching halt. And so what you've got is investors who are savvy, betting big, putting all their eggs in a basket, that they're going to watch GameStop go up in smoke. And so a wild band of rogue, probably middle-class investors, pipers, making small bets, went ahead and gathered themselves together off of a Reddit and said, let's go ahead and save GameStop. So all of them started pouring their money into GameStop stock, which has literally destroyed the market space for these hedge funds that were shorting against GameStop. And so now they're looking at AMC movie theaters, which have been absolutely decimated due to COVID-19. And they're looking at doing the same thing for that stock. Just remember, there is thousands and thousands and thousands, if not hundreds of thousands of stocks out there that all fit into this. This is more of a symbolic win that they were able literally knock these hedge fund guys off of their investment. And now I think GameStop's trading at like 700% of what it normally would be.
It's incredible. I'm going to jump in here real quick because I think we need a little bit of help with your sound there, Steve. But also I want to say one of the things that's been happening too is, watching these investment bankers, watching these sort of Wall Street honchos, watching, for example, Jacob Frenkel, former SEC general counsel, try to wrestle with what's happening and try to find a way for what these Redditors are doing to be illegal or wrong or outside the rules, but for the way other hedge funds work to be just fine. And so you have Frenkel, for example, last night on CNBC saying there's nothing wrong with free speech, but what we really have here is a kids gaming stock who needs adult supervision. And I think that adult supervision is probably an SEC trading suspension. And so I wonder if you could talk a little bit about, whether you think anything that this group of Redditors has done, or these group of retail investors has done, that actually breaks the rules, or that breaks any rules that aren't being broken all the time by the people with real money.
No, they're not breaking any rules that are being broken constantly. It really is a symbolic slam. You've got this group of people that said, we're not going to let you destroy this company. Now, I don't know how long they can maintain that position because, again, the market itself is dying. But it is interesting to see people fight back for once. So, kudos to them. Whether it amounts to anything or not is almost secondary.
Yeah. Do you think we will see an SEC trading suspension or some kind of intervention? I mean, a lot of people have been asking about that.
It wouldn't shock me at all simply because we have a very Wall Street friendly administration, a Wall Street friendly group of appointments, and a Wall Street friendly legal system founded on keeping capital happy. So it wouldn't shock me in the least bit if this becomes a legal battle and these little guys get burned for it. Wouldn't shock me at all.
I mean, I suppose they could, they could keep their money, have their cake and eat it too by selling the stock that they've bought as it keeps going higher. Because, the other thing that I wanted here is I want you to whisper me some sweet nothings here about hedge funds nearly going bankrupt as a result of this. Because, the story headlines last night were that you've got, sorry, I'm just finding the headline that tells me the names of these two hedge funds. But you've got, people, Steve Cohen and Ken Griffin pouring billions into one of these short sellers to help keep it afloat. So, I mean, I understand and I agree with you that this is a tiny, tiny event in the overall sort of sea of Wall Street, right? And this is more of a symbolic victory than anything else if it ends up continuing to be the victory that it appears to be. But we are still talking about quite a lot of money. And there are still actually, it appears to be some individuals, notably this hedge fund Melvin, for example, that's going to lose a lot. So I wonder if you could tell us a little bit more about that.
Yeah, so, I figured this way, and this is, as I sat back and I thought about this, one of the articles that I read on this positioned this very, very well. And what they did was they described that, when you have money, coming by money is pretty easy because you have friends with money. And friends with money tend to keep you out of the hot water that the regular guy gets burned up with. And if you look, these small investors, they don't have that kind of protection. They're pouring everything they got into this to stop it. It's kind of like a game for them. But the flip side is that these wealthy guys, it might take their stock down. That might take their operating capital down. But these guys have access to capital. That's the thing about inequality, especially the further you get up the food chain. The ability to get a hold of additional capital to keep your game going and to socialize your losses while allowing everyone else to drown in it. That's a staple of inequality in America, and you're watching it happen right now. Those guys won't go bankrupt. Why? Because they've got friends with money. And that's the deal.
Yeah. And I just want to point out something I saw. CNBC Mad Money host Jim Cramer a couple days ago was urging people not to get in on the GameStop thing, saying, quote, there are easier ways to make money. And we don't have to go too deeply into this. I just made me think, actually, there are not. Other than being born onto a huge pile of money, there probably is no easier way to make money than by, reading a little bit and clicking some buttons and borrowing $1 billion from, as you say, your wealthy friend to swap around and try and see if you can turn into another billion. So, the idea that hardworking people are being affected by this is sort of silly, I thought, Steve.
Absolutely. It really is. I mean, to me, this is bourgeoisie versus petite bourgeoisie. I mean, this is the Pikerville next level upper middle class fighting the oligarchs. And it's kind of funny, but neither one of them are going to be hurting at the end of it, really, to be fair.
Absolutely. It's nice to just have a fun story to start the day with. So, Steve, really glad you were able to drop by. And before we let you go, tell our listeners where they can go to find more of the work that you're doing.
Yeah, so we have a podcast called Macro and Cheese, macro, the letter N, cheese.com. And that's our podcast. We're up to like our 105th episode now. Please, please, please check us out. Of all the times where you really needed to understand how the economy works while they're sitting there holding back stimulus checks and so forth, now's the time to get smart on economics. And hopefully listening to our podcast will help people do that. And you can also find us at www.realprogressives.org.
Yeah, absolutely. And Steve Grumbine, thanks for dropping by. I hope all our listeners check you out, and I hope you are feeling better every day. All right.
What do we want?
News, politics, and culture.
When do we want it?
Wait, we weren't finished. News, politics, and culture without the